Good morning, traders. It is Thursday, February the 13th. Taking a look at the charts, we've had the SP 500 here. This is the SP 500 futures 30-minute chart. And you can see here we've had an extensive run to the upside. Starting to see a little bit of distribution going on yesterday, possible a little bit of a breakdown this morning in futures. We did have a quick pop there yesterday morning, followed by some selling. And I was watching the volume yesterday, even though it wasn't a big volume day. A lot of the volume spikes intraday on the smaller time frame were some pretty good waves of selling. So there's some distribution going on up here, and we have come up into a short-term resistance zone, which is this level right across here, which is the next level of resistance. And that's on a very short time frame. If we were to just zoom back even further to see the big volume void, I'll just zoom in a little bit to about here. You can see here we've come right up underneath almost a key major resistance zone up here, right below this more or less topping formation. That's kind of right where the major breakdown really started to happen, and that's where we're starting to see some selling now. For lucky, we're going to see price continue to work its way down and come down, test the lower end of this range, and possibly even break down and go further. But overall, we ended up getting long in the market somewhere right over here, or sorry, short the SP 500. So we got a little bit of room to go just to get back to break even, but there's still a lot of potential for us to come down here, hit our first target or two, which will be a more or less a 2 or 4% gain on the market, and then we'll play it by ear there. But overall, yesterday we came very close. We came only a few ticks away from the stop in futures. Very close to getting stopped out. Today, if the market has another push higher, if this pullback is just a bull flag and we see a push higher, if we break yesterday's high, then we'll be getting stopped out of the SP 500 play. Now, taking a look at precious metals, let's just jump over to silver real quick here. Silver's been in this tight range for a while. It is trading up to the upper end of this range. There is some room for it to pull back, about a 13% pullback. If we were to just draw this channel here is basing pattern. There's room for it to come all the way back down and play around somewhere down in this range. Overall, at any time we could see silver pop. We have seen miners pop for both silver miners and gold miners. We've seen gold pop in price. Silver here is lagging a little bit. Sometimes it can lag even up to a couple months, but overall I think we're safe as long as it stays in this channel here. We should be safe, and we really don't want to have to chase prices higher. And hopefully we do see a pop and a breakout to the upside in silver. And I think once it starts to run, we could see a very explosive move to the upside. You can see the type of moves you get in silver on a percentage basis. They are huge. And because we're in this nice tight little channel here, and we're using a 2x leverage ETF, we can really squeeze some good profits out of silver once we see this momentum break to the upside. Now, mind you, a lot of commodities have been basing here for a while, and they're all starting to break out. If we look at a couple other commodities, we just go to the daily chart real quick. If we go to the corn ETF, overall, you can see these huge pullbacks in commodities. Looks as though there's a little basing pattern here in corn. We've seen a pop in price. Now, if we just zoom in, you get more of a visual of the a little bit of a basing bottoming pattern here. We've seen a pop. If we look at the wheat ETF, you can see it's had a little bit of a pop. If we go to coffee's had a huge pop with the drought going on. We look at sugar, SGG, you can see it's had a big pop. Nice pullback. Yesterday had another big pop. Looks as though it's an impulse wave looking to go higher, and possibly a inverse head and shoulders pattern here, which looks relatively balanced. This shoulder equals roughly about the size of this shoulder, and we've got the head. You get a pop here. We could easily see a run in sugar all the way up to around the 60 level, which of course is right through this key pivot where it was resistance and then became support. And of course you can see here it also acted as a key level where there was a little bit of a pause, and then of course price broke down and continued to move down. So overall commodities look like they're popping. If we just go GLD, you can see GLD had this similar little basing pattern across here, and it popped. the last couple of days. Now everything's had a pretty substantial move in the last few days, so I wouldn't be surprised if we see it consolidate a bit, and then on the next wave higher, I think we could see silver follow suit. But if we just look at the gold miners, GDX, you can see the cleaner pop in GDX here. We had this cup and handle pattern, this tight little channel, and then it popped and ran about 15% in 3 days. Yesterday it gave back a good chunk of those gains, but overall that's what you get when you get something that goes straight up. A lot of times you can see it give back at least half of those gains, consolidate for a bit, and then start another run higher, similar to what you see over here. You get a strong move up, you get a big wave of selling, clear the air, and then you see some more upward pressure come back into the market. Now overall, if we look at the GCC ETF, which is a basket of commodities, you can see here this is holding a lot of different commodities. You can see in average we've seen price pop up. Now overall, most commodities have had an extensive run or a pop in price to the first resistance zone, and this basket here is showing that we've popped right into resistance with the overall commodity picture. Now if we zoom way out here, you can see this huge bear market more or less in commodities. This is starting to show a bottoming pattern. This is more of a basing pattern right here. If you can break this 27, that'll be a pretty good basing pattern. Now this is a bear market price action. This here is still bear market price action, but the fact that it's grinding lower at a nice steady stream, this is simply just an unwinding and investors giving up and forgetting about the commodities and focusing on more or less equities. This is the sign that the market is forgotten and there's going to be some good upside potential when everybody brings their attention to it. So overall, we got this basing pattern starting to form, and I think there's big potential for commodities here to have some strength as the equities market in general starts to mature and top out. Usually you'll see commodities hold up and possibly even rally during the time when the equities market is topping. So that's kind of where we stand with the overall commodity picture. Now let's take a quick look at natural gas. Here's the natural gas chart. It's got a real mixed picture here, depending on the time frame, the investment you're looking at, if it's an ETF on regular trading hours or not. We got this kind of key high volume resistance through here. It's got this rising wedge. It could pop. It could break down. Overall, not a big fan of this price action. What we liked with natural gas was this 3 surges to a high with a very clean signature pattern, high volatility, pushes to new highs followed by extreme selling, and when you get that third push, usually in a reversal candle, it's a time to sell. We did get about a 40% move out of there, and now we got an oversold bounce and we're at resistance. Question is, if we get more cold weather here, we're going to see another big pop, and really, in my opinion, now we've got this broadening formation in natural gas, very unstable to trade, and we're going to just ignore it for now. Taking a look at crude oil. Crude oil's been flirting with this $100 mark. Had some selling yesterday. Almost looked like a reversal candle. It wasn't a bearish engulfing candle, which is what I was looking for on the daily chart. If we just go to the daily chart real quick here for a visual, you can see we just had a long upper wick yesterday. This morning we're seeing a little bit more follow through. It would have been nice if we saw the price come down and close to where it is right now, actually be below the previous session's opening and closing price. That would be a nice bearish sign. Overall, we may slide into a short position here using an inverse ETF. There is good potential for a downward slide. We had some pretty good selling volume yesterday. So I'm going to keep my eye on it today and see if I'm going to put some money into it and try and ride a pullback in price here. Now taking a look at the US dollar index, got a little bit of movement in the UUP ETF this morning. We're starting to see a little bit of a breakdown. Let me just expand this price action a little bit here. You can see we're in pre-market, we're seeing the US dollar pull back. Obviously, a falling dollar will help lift commodities in general. So we could see if the dollar falls all the way down to a key support zone down here, we could end up seeing precious metals have more of a pop and continue to rise. Taking a look at the chart of bonds. Bonds have had a nice pullback here the last few sessions. overall, everything looks relatively balanced. It's been a big move to the upside. We've got more or less a little three-wave correction to the downside, a nice steep correction, really kind of cleansing the air, and it's starting to have a nice bounce up this morning. Overall, I do feel as though bonds eventually are going to be coming up, testing this 135, 136 area, and testing a breakout zone. This is a key basing pattern level right here around the 136. If we do see bonds move up here, continue to rally, that means the equities market is likely going to sell off. And we do want equities to sell off. We're short the SP 500. We're long precious metals. If bonds rally, we're probably going to see precious metals rally also. Now, one quick thing here to cover on the precious metals. We are seeing gold and silver trade lower this morning. But overall, let me just flip to a shorter time frame chart here, 30-minute. So here's the GDX ETF showing a 24-hour chart. You can see this morning we're getting a little pop up in gold miners. While physical metals are down, we're seeing a little pop. So this is a little early sign saying that we might see some money start to rotate, some fear money rotate into physical metals today. Once if the equities market starts to break down, we're going to see gold miners probably move back up, and we're going to see physical metals probably hold their value, if not rally. Anyways, that's it for this morning, and I'll talk to you in a little bit. Bye-bye.